Oh, okay. Okay, good evening, good afternoon, ma'am and everyone. We're from Group 2 and in this video, we're going to be presenting our Bradmark case for Chapter 9. Next, okay. So first of all, I'm going to explain our internal control assessment of the revenue cycle. According to the book, it is divided into input control, process control, and output control. So I'm going to first explain the input control. So, in Bradmark, the sales department diligently examines the available credits before generating a sales invoice record, thereby safeguarding against unauthorized sales and minimizing the risk of bad debts. However, it is also important to note that the errors or maybe oversights during the credit assessments done by the sales department may lead to inaccurate credit assessments. And the next one, the credit manager grants verbal authorization to the clerk for increasing a customer's line of credit. However, it is also important to note that during the verbal authorization, there is an absence of proper documentation for such credit limit modification, and it can possess any future challenges in terms of like tracking and auditing and making it essential to establish a robust documentation process. And then the final one and Bradmark is that the system automatically assigns a unique invoice number as the primary key for each sales invoice record, ensuring distinct identification and facilitating transaction tracking. Next.
Okay, let's move on to the next control, which is the process control. So the warehouse terminal automatically prints the stock release document based on the sales invoice, reducing the likelihood of manual errors and therefore guaranteeing the precise picking of goods. Nevertheless, it is important to recognize that some potential failures could occur in the automated printing process of stock release document, may result in incorrect selection of goods. And the clerk confirmed that if the quantity sold and the system automatically update the quantity on hand fields in the inventory record. The control play a crucial role in maintaining accurate inventory levels. However, it is important to having a caution as manual confirmation of quantity sold can introduce error or overlook certain items requiring ongoing monitoring. The shipping department maintains a comprehensive shipping log file, providing a reliable audit track for shipped goods, and the shipping department also ensuring traceability and accountability.
Okay, so here we're at the last part of the Bradmark's internal control of revenue cycle, which is the output control. So at the end of each day, the system conducts an automated search of the sales invoice and shipping log files to generate the customer invoices. So this is done to ensure the completeness and the accuracy in billing. However, it is very crucial to acknowledge that the system errors could potentially lead to missing or inaccurate data on the customer invoices, necessitating attentive review and reconciliation procedures. As we all know, the cash recipient's clerk, known as Mary, she records the customer payments by entering the corresponding invoice number, prompting the system to create the cash receipts records. So this control mechanism facilitates the reconciliation of payments with the relevant invoices. So nevertheless, it is imperative for Mary to exercise caution, as errors in entering the invoice number could lead to misapplication of payments or the reconciliation discrepancies. So she also prepares deposit slips and securely transfers the checks to the bank to again ensure that it is handled properly and the funds are safe. However, it is very essential for her to handle the slips with the utmost care, as any mishandling could potentially result in financial discrepancies for the companies involved.
Okay, so here is the audit procedure. So basically we want to know the assertion of existence of occurrence, So the audit objective is to verify the AR represents amount actually out to Bradmark. So what is the audit procedure to be from using ACL? We use ACL to prepare account receivable using AR confirmation samples. So after that we move to the completeness of the assertion. First, we need to ensure that all outstanding debts owed to the organization as of the balance sheet that are duly recorded in the account receivables. And second, we confirm that all sales made for delivered people, goods, all service provided, and any returns and allowance during this specified period are accurately accounted for in the financial statement. And for the ACL will be explained by my friend.
Okay, so we're going ahead to the we're going ahead to the ACL. Okay. First, we're gonna open the sales invoice, and for the first for the first assertion, the procedure is going to be use ACL to prepare accounts receivable listing and select AR confirmation samples. So in order to do this, we have to first put a filter on. The filter is run none
Equals to 0.
equals 0. Okay. Equals 0. So this shows the accounts that haven't been paid. So this amount is going to show the accounts receivable.
Okay, so now we go to classify on.
Classify
Classify
on customer number
Yes, customer number.
and then amount due.
Oh, yes. For the
Amount
fields.
due and then output screen. Okay.
Okay.
Okay. So okay. So from here we can see that there are some accounts receivable that still needs to be paid to us, and from this we can see that the total is 4,752,257, and this amount is the same and stated in the Bradmark case description. Okay, so for the next management assertion, which is completeness.
First we're going to profile.
Okay, so still on. Okay, so we're gonna delete the filter first. And then going into analyze, and then
Statistical
profile. Amount due.
And I think it's
Both?
Yeah.
Okay, both. Okay, so as you can see, the amount due is the same as stated in the Bradmark case description, and the absolute value is also the same, and we can also see the minimum and maximum value. And the next step is
we need to look for the gaps.
in
Analyze.
Okay, analyze, and
Look
then
for gaps.
look for gaps. The gaps will be on invoice number.
I think it's the
Sure, it's gonna be the
invoice number.
invoice number, and then output will be on screen, and then put on OK.
Okay.
So from this we can see that there are 173 gap ranges detected and 13,696 missing items, and from this we can see that okay, so just this is the summary of the data, and if we see from here we can see that the invoice number starts with 200,000, but the next one starts with 202,284. That means that there are 2,283 missing invoice numbers, and the same with all of this, meaning that in total there are 13,696 missing items.
Okay.
And then for the next one,
For the next one, we are going to move on to looking for the duplicates. So we go to analyze.
Go to analyze
Look
and
for
then
duplicates.
duplicates.
And then invoice duplicates on, invoice number.
Invoice number.
Yes, okay. And then the fields will
The
be
fields will be
due date,
due date,
and amount due.
amount due. Okay.
Okay.
Output, make sure it's on screen, and then press OK. So okay.
So there's zero
There are no duplicates. That means that the data is all fair and correct.
Okay.
Okay, so for the next one, so for the next management assertion, it's gonna be explained by my friend.
Okay. Okay, so the next audit procedure for the assertion, valuation, or allocation, our first objective in this assertion is to verify that the balance of accounts receivables accurately reflects its net realizable value, and the second is to confirm that the provision of doubtful accounts is appropriately allocated. And the procedures that will be carried out by us during the ACL is we're going to generate the aging summaries of invoice amounts by comparing the due dates of each record in the accounts receivables aging report with a specific cutoff date. And for the next, which is the last assertion, which is the accuracy, our first objective is to confirm that the accuracy of revenue calculations, ensuring that they are calculated correctly using the up-to-date prices and accurate quantities. And second is to verify that the mathematical accuracy and alignment of the accounts receivable subsidiary ledger, the sales invoice file, and the remittance file with the general ledger accounts. And the procedures will be further explained in our video.
Okay, so going ahead to the ACL procedure. Okay, to the ACL. Okay, so in this we're still gonna be on sales invoice. So as done on the first management assertion, we are going to put the filter on remit number
Equals to zero.
equals to 0,
Equals to zero. Yes.
equals to 0, and then
And now we analyze
we analyze it,
age.
and then okay. So for age,
Age on.
we on due date, and then the cutoff date will be on December 2004. Wait, 2004, December 31st, 2004. And why is this December 31st, 2004? Is that majority of the data is on 2004. So we assume that this is going to be the best cutoff date. And then in regards to aging periods, we're just going to do 120, since we feel like in regards to 10,000, it's just going to be a little bit excessive. And then for the subtotal fields, it's going to be amount due.
Yes.
And then make sure the output is already on screen. And then we're going to put OK. Okay, so for this one, why we did the age feature is that the age feature makes sure that the dates that we have set, which is the due date, is compared with the cutoff date, which we have set to December 31st, 2004. So this means that in regards to like less than 0, it's gonna be the due dates that are after 2004, and that they're after December 31st, 2004, and these ones more than 0 and up until more than 120, it's gonna be the debts, the ones that are long overdue. And we need to, as auditors, we need to specifically focus on the debts that are more than 90 years old, because this means that it has been so long overdue that we need to make sure that whatever the cause is for the long payment.
90 days years old.
Huh?
You said 90 days years old. Oh, yeah.
90 days. 90, 90 days.
Oh, my brain.
90 days. 90 days old. Okay, so that is it for the what is this assertion? The valuation and allocation. Okay, clear the filter, and then
Yes.
for the next one we're gonna do accuracy, which is the last management assertion. Okay, so
First,
first we need to so in order for accuracy, the audit objective is to make sure that whatever calculations that are in here or whatever data that is in here is accurately represented. So for in order to make sure, we need to first total the amount due, total fields. Yes,
Okay.
so as you have also mentioned before, the amount is exactly the same as the one mentioned in the Bradmark case description, which is 5,300,000. And then, okay, so this is already the total. And then for the next one, another method that we can measure this is by profiling the data, which is statistical, and then go to profile. Okay,
Yes.
so this, we have also already done this before. We need to make sure that it is 5,380,000, which is already accurate. Okay, so for the next one, we're going to have another method to do this is to stratify it. Okay, so analyze, stratify, and then amount due. On amount due, and also on amount due. Okay, so the minimum maximum already filled out since we have done the profile before, and then we make sure that the output is green, and then press OK. Okay, so from this we can also see that the total is also 5,379,996. And then, so that is to make sure the amount that is in the sales invoice. And then for the next measure of accuracy, we're going to be doing it from the
Cash
cash
receipts.
receipts. So from this, we need to open.
Make sure that the invoice number,
Okay, so
table it out.
okay, so the essence of this like method is to join. So in order to do that, we first need to make sure that the data is already on the same type. So we have decided that we want to use customer. We want to use the invoice number as the primary key and the secondary key. So make sure that the invoice number is already on ASCII. So here the invoice number is still on numeric. So we're going to change it to ASCII. Okay, change it to ASCII, and then
Green check mark.
green check mark, and then okay, we exit that, and then go to sales invoice.
Yes, and make sure that
and make
invoice
sure
number-
that is already on ASCII, which is already
Yes.
on. So from this, we need to go to sales invoice, and then we need to join the tables. The secondary table will be cash receipts, and as we have already edited before, the primary key is invoice number, and then the secondary key is also invoice number. And then the primary field will be amount due, customer number, due date, invoice number, and then remit num. And then the secondary field would be also the amount, since we need to compare the amount between the two tables. Okay, pre-sort the secondary table, and then this is already good. And then 2, let's just name this comparison underscore an amount, comparison underscore amount, and then oh, okay. Oh, I haven't. Okay. Invoice number. And then secondary field. Make sure. Okay, it's already on amount. Okay, primary field. It's already on that. Okay, maybe we can have. We can delete some information.
Yes. We can
Invoice.
delete,
remit,
remit
and then due
and
date.
yes,
Due date, and then
okay.
okay, and then we press okay. Okay, so in order to make this easier, I'm just going to slide it over to here, and then in order to find out the amounts that are not the same, we're going to build a filter, which is amount, and then amount due,
Yeah, it is the same.
and then press OK.
Yeah.
Okay, so for this one, there are we're gonna count. We're gonna count records. Okay, press OK. There are 6 records that don't have the same amount from the sales invoice to the cash receipts. So this one has a difference of I'm pretty sure that's like 100,000, and this one also has a really big difference. And most of these differences are in regards to like commas or decimals. So this, as an auditor, we need to make sure that these amounts are correct, and what amounts between these are the correct one. Okay.
Okay, now we move on to the additional concern, which is the how to identify the customer pattern. So what is the objective of this session? So we want to find anomalies or transactions in customer patterns.
Okay. So okay, so we want to focus it more onto customer, because I think that's one thing that a lot of auditors tend to neglect. So next, going to the sales invoice again. Going to sales invoice. First, we're going to profile it. Statistics, profile, amount due, and then more. Okay. And then okay. So this is still the same as before, and we did profile just because we need to fill in the minimum and the maximum. And then going back to the sales invoice, we are going to stratify it. See, this minimum and maximum is already automatically filled, and then we stratify it on amount due also, and then also on amount subtotal fields also on amount due, and output is also screen, make sure, and then we press OK. And this is also the same as before.
Yes.
Okay, same as before. So but now we focus it more onto the customers and the customer behavior. So in this, we can see that the last three intervals have only one customer buying them. So maybe let's look at the hyperlink, like right here. So as you can see here, there's only one customer, and they have a ridiculously big amount of transaction. And you can also see it from like this one. We also have one customer here, and then also one customer here. Like 3 of them have really great transaction amounts. So an auditor needs to look into what kind of product that they're buying. And then for the next one,
the last one will be, we go to classify.
Yes. Okay. Back to sales invoice.
Yes.
Clear the filter, and then classify. We classify it on
the customer number,
and then
amount due,
and then output screen, and then we press OK. So from here, since we classified it on customer number, we can see how many times that the customer has bought from this company. So as you can see here, there's some customers have 2 transactions, or like maybe 1 or 4, but there are also some customers that have done like 100 transactions, or maybe 85 transactions, 88 transactions, and the total is still 700. But as an auditor, we need to make sure as we have analyzed before with the stratify feature, what kind of transactions that the customer made that require such a high amount of money, or maybe what kind of products are the customers buying that requires 100 counts of transactions or payments. Okay, so I think that's it for number 4, and I think that's it for...
That's all for Bradmark case chapter 9. Thank you for watching.
Thank you for watching.